Welcome to the War Room. Today, we are analyzing the ultimate battle for wealth preservation. Real assets, gold and silver, versus digital assets, Bitcoin and Ethereum. The markets are correcting. The screens are red. But while the amateurs panic, the strategists are marking their zones. Let's start with the oldest form of money, gold. Before we deploy into the charts, a critical rule of engagement. I am a strategist, not a financial advisor. The markets, whether real or digital, are battlefields. They are volatile and unforgiving. Everything I share is for educational purposes only. I provide the intelligence, but you pull the trigger. Always manage your risk, use stop losses, and do your own research. Now, let's look at the charts. First, let's look at the immediate battlefield on the 4-hour chart. We are seeing a sharp pullback from the highs. Is this a crash? No. Look at this white ascending channel and look at this yellow support zone around $4,660. A pullback to this trend line is completely normal market behavior. As long as gold holds this channel, this is just a sanity check within a massive uptrend. We expect buyers to step in right here. However, we must always have a plan B. If that channel breaks, we zoom out to the monthly chart. This is the long-term vision. Soldiers, look at this structure. We have a massive orange ascending trend line that has guided this bull run for years. My long-term expectation is simple. The market loves to retest major breakouts. Look at where the Fibonacci level meets the orange trend line. It is a perfect confluence. If the short-term structure fails, a correction down to this zone would be the ultimate generational buy opportunity. But remember, this is a monthly chart. This is a very long-term scenario, not a prediction for tomorrow. So for gold, we watch the white channel for a bounce. But what about its faster, more volatile brother, silver? Let's see if the metal of industry is ready to outperform. Now we move to the wild card, silver. Soldiers, short term, we are walking on thin ice. Look at this white ascending support line on the 4-hour chart. We are clinging to it. But be warned, if this white line breaks, the structure fails. My projection is clear. A breakdown here triggers this yellow path, sending us straight down to the support box for a deeper correction. If you are a leveraged trader, this is your danger zone. Watch your step. But before you get bearish, you need to see the monster. Zoom out to the monthly chart. This is not just a chart. This is history. We are looking at a massive cup and handle formation that has been building for decades. The breakout has already happened. While the short-term traders panic over a few dollars, the long-term math points to a different reality. The technical target of this massive cup is not $50. It is not $100. We are looking at a long-term trajectory towards $200. This is a super cycle, so if we get that dip on the 4-hour chart, do not panic. Treat it as a gift. Silver is playing the long game. But now let's switch to the asset that moves faster than anything else, the king of digital wealth, Bitcoin. Let's see what the data says. Now the king, Bitcoin. Soldiers, the crowd is panicking because they are zoomed in on the 15-minute chart, but in the war room, we zoom out to the weekly chart. Look at this blue path. This is the only thing that matters. We are technically still inside a massive bullish leg. Have we made a lower low? No. Have we broken the market structure? No. As long as we hold above the previous major low, this is just a healthy retracement within a supercycle. The trend is up. Do not let the noise blind you. Now, let's zoom into the daily chart for the immediate battle. We are trading around $83,300. We are testing this black ascending trend line. This is the line in the sand. The bears are trying to push us down to the yellow box at $80,000, but the bulls are defending this trend line with their lives. We are at a decision point. And here is why I believe the bulls will win. Look at the funding rates. See those red bars appearing on the right? For the first time in weeks, funding has flipped negative. This means the retail crowd is aggressively shorting Bitcoin at support. They are betting on a crash. But when the crowd goes short in a bull trend, they get squeezed. This negative funding is the rocket fuel we need for the next bounce. The structure is intact. The crowd is short. The trap is set. But Bitcoin is not the only giant at a critical level. The prince, Ethereum, is facing its own judgment day. Let's analyze ETH. Now, we move to Ethereum. Soldiers, if you only look at the price candles, the situation looks ugly. We are making lower lows, trading around $2,726. The bears are celebrating, but in the war room, we look deeper. There is a massive signal hiding in plain sight on the 4-hour chart. Look at the RSI indicator at the bottom. While the price is crashing down, the RSI is climbing up. Look at this yellow ascending channel on the RSI. This is a textbook bullish divergence, positive mismatch. The momentum is shifting to the buyers, even though the price hasn't reacted yet. My strategy is simple. As long as this yellow trend line on the RSI holds intact, I remain positive on Ethereum. This is a coiled spring waiting to snap back up. And what fuels this snapback? Look at the funding rates. See those deep red bars? Funding has flipped negative. The crowd is aggressively shorting into this bullish divergence. They are providing the liquidity for the pump. Divergence plus negative funding equals reversal imminent. Soldiers, the intelligence report is clear. Let's summarize the battlefield. Gold is taking a healthy breath, preparing for a potential macro retest. Silver is volatile in the short term, but the monthly cup and handle targets $200. Bitcoin, the weekly bull structure is intact and funding is finally negative. The fuel is loading. Ethereum, price is dropping, but momentum, RSI, is rising. The divergence is real. The market is shaking out the tourists. The question is, are you a tourist or are you a strategist? Before we dismiss, a final reminder. I am showing you the map, but you fly the jet. This is not financial advice. The markets are ruthless. Never trade with money you cannot afford to lose. Always manage your risk, use stop losses, and execute your own plan. If you want to survive the volatility and trade with the smart money, you know what to do. Smash that subscribe button and turn on the notifications. We don't panic here. We prepare. Hold the line. War room. Dismissed.